What is going on, SoFi fans? Welcome back to Financial Journey. So today I want to give you a good overview of things that you need to know for today, why we're going very much red, and all that fun jazz. Also, what the IMF just recently warned. I'm going to go over all that fun stuff, but before I do, making sure you guys hit that thumbs up and subscribe is always greatly appreciated. With that, let's get right to it. Live ticker at the very bottom of the screen, currently red. For the most part of the day though, we were green, and out of every other growth stock out there, we were the only green one. So that's a very good takeaway for today. As of right now, 16 million for volume, 2.9 million shares being purchased by institutions on the secondary market. So one common thing today is clearly institutions are taking a step back, both on the secondary market and also the dark pool. So let me know your thoughts on that. I know a lot of retail investors really like to see what the institutions are doing behind the scenes, but based on the actual pump, if you want to call it that, first thing in the morning, a lot of people are saying that the market is now just being artificially pumped up just to take retail investors' money. So very interesting concept out there. So let me know your thoughts on that. When it comes down to it though, it is now entering into the time of season for 13Fs. So institutions and ETFs disclosures into SoFi. And as of today though, there's only one Savior LLC increasing 9,000 shares of SoFi. Actually, it is green, so starting a brand new position. But one interesting one came out on September the 29th, and it was JP Morgan through their Beta Builder US Midcap. They made and started a brand new position of roughly about 380,000 shares. And keep in mind, this was done during Q2. So when it comes down to it though, during Q2, there was a ton of fear out in the market. So the fact that JP Morgan actually added SoFi is a very big deal. And right now, based on this actual their ETF, it does look like it is lagging the market a little bit, so 21%. So it's kind of matching the broader market. So it's very good to see SoFi being added to that. And this is why in the past I've always touched on this and why this is a very big deal. I've started to really touch on this roughly about 6 months ago. 6 months ago, we were at 38 ETFs. So during that time, we've increased a pretty significant amount. So as of right now, there's 54 ETFs that do hold SoFi in its portfolio. So very big and beneficial for SoFi. So let me know your thoughts on that. There was an article that came out, very interesting in the grand scheme of things. It was by Bazinga, where in this, it does say, how is the market feeling about SoFi Technologies? In this, it does mostly talk on short interest. And I always like to give you updates on short interest. So this video is going to be no different. So I'm going to touch on that. But in this, it does compare it to other similar stocks. So it doesn't necessarily say who that actually is, but it does say SoFi is roughly about 11% higher than a lot of other similar stocks. So let me know your thoughts on that. If they are comparing them to other traditional banks, when it comes down to traditional banks, unfortunately, their short interest is very, very small. So it's very interesting, and unfortunately, like I said, it doesn't necessarily say who they're comparing it to. But short interest update as of right now is pretty stagnant today. So right now, the shorts don't necessarily know exactly what to do, whether it to be suppress SoFi even further or whatever it might be. So as of right now, short interest is 13.87, so increasing only 6,000 shares as of right now. So pretty basic. Cost to borrow average is 1.47. So let me know your thoughts on that. Overall though, the utilization has also dropped pretty significantly, so 84.27. So it's definitely broken off of that 100%, give or take around 1 month ago. So, and technically as well, if you look at the overall dollar value, we're only at 572.57 million. And I obviously say only very loosely, but we were at one stage roughly about 1.5 billion. So definitely a nice change and decrease over the last little bit, but still that is something and possibly a concern that a lot of people need to watch for. Keep in mind though, I'm not a financial advisor. Do your own due diligence at the end of the day. These videos are for only entertainment purposes. So in the end, I hope you are entertained by all this. But when it comes to it though, IMF recently gave a very broad warning. And so they do say there is a higher chance of a recession. And not only that, though, they're giving a little bit more of a darker global outlook. So let me know your thoughts on that. This is basically what sparked a lot of the broader economy, and also jobless claims as well, or initial jobless claims came in a little bit higher than expected. So these two things coupling together is definitely scaring the hell out of the broader market. But as I always say, you need to take a step back, find credible companies that have very good balance sheets and in reality should thrive in a higher interest rate environment such as SoFi. SoFi is doing everything right. Unfortunately, it's just a little bit more of a bear market. We can't really plan or adjust for that, but in reality, SoFi should do a lot of good things in the coming years. And like I always say, that is when you should be investing for. This is why a lot of ETFs are increasing their position during these times of red and fear and bearish sentiment and all that fun stuff, because they have a long-term mentality. They know SoFi and a lot of other banks and so forth are going to flourish in the coming years, especially if they maintain roughly around the 5% range until the tail end of 2023. So that's definitely what the latest concept is coming out from the Feds, but still, SoFi is going to do a lot of good things. This is why I still continue to buy. Unfortunately, I didn't buy as much as I would have liked when it did break below that $5 mark. I bought some at $4.95, but still, at the end of the day, if it does do a reverse stock split, then you just buy more, average down. That's all you can do. As an investor, your whole goal is to find a good, credible company such as SoFi, and just make sure you guys do your own due diligence. That's the name of the game. That's the end all be all. But given the circumstances of where SoFi is at, I think it is going to do a lot of good things, even more so looking on the actual technicals. I have the 50, 100, 200-day moving averages, Bollinger Bands, RSI, stochastic, and momentum. So one of the big factors why the broad market did have a nice little bit of a rally at the beginning of October is everything was so suppressed. Everything was so oversold. So we kind of broke out of a little bit more of a value rally, if you want to call it that. Momentum number of retail investors are for the most part maintaining itself, which is a very good thing. RSI is also at 42, and on the actual chart, it does appear that we attempted to break out from the higher to the lower percentile of the Bollinger Band, and we failed to do so. So we didn't have enough to get over that resistance point, so we're a little bit more consolidating. Keep in mind, this a little bit more of a red day sometimes is temporary. If you do look on the actual charts and the technicals, when we do fail to get over a resistance point, typically we consolidate a little bit and try again. So definitely this fear in the market brought on because of the IMF and some economic data that definitely does not count us out one bit. So let me know your thoughts on that. If you haven't already, hit that thumbs up and subscribe, as it was greatly appreciated. Also, just give yourself a shout out if you've been buying this dip. That's one of the latest things that I feel a lot of people haven't really been doing, is buying the dip. A lot of people are anticipating a very, very big recession. And when I say a recession, I know technically we are in a recession right now, but a lot of people talk on recession and ultimately mean doomsday. So 2008, possibly even worse. That's what people are talking about for a recession. So this is why also the IMF is not necessarily just saying that, oh, we're in a recession. They're saying a higher recession risk, meaning a massive doomsday kind of scenario going on. Again, it's one of those things that a lot of fear can be easily spread, but I always like to see what the data behind all the scenes is. And as of right now, institutions are kind of taking a step back, but all the data for the most part is fairly good. So again, let me know your thoughts on all that. If you haven't, hit that thumbs up, subscribe, and with that, I appreciate you guys watching. Let's all make a lot of money on SoFi.